Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified, episode 33. So what are we going to talk about? Well, I'm going to continue my discussion on trading psychology, and that's really the most important part of trading. As I hope I have shown, trading can actually be not easy, but quite simple. It's the following the process that's key, and not controlling but embracing our emotions. We're going to get deeper and deeper to that. And I don't want to just present problems, so I also want to present some solutions, and I'll give you a few of those towards the end of the presentation. We have a new mystery chart this week. A mystery chart is a stock that I have recommended, and I actually have working orders for or have recently triggered into. We'll get to that in 1 second too. Housekeeping, I do take requests. If there's something you want me to cover, go to davelandry.com/contact. If you want the slides from this show and all prior shows, which contain things such as setups that we often talk about in these shows, go to davelandry.com/StockCharts, and I'll give you enough other information to keep you busy for a long time, including a market timing course. Speaking of market timing, I have bear market updates on my website. I might have to change that to bull market updates really soon. Now let's talk about the mystery chart this week. This stock bottomed out nicely and began to form what's called a cup type of bottom. It just goes down and then begins to rally off its lows. Now in that rally, it not only began to rally off the lows, but again, it began to accelerate higher and then pull back. And this pullback is a pullback slash TKO. There is a bit of a knockout move inside the pullback. I would just mostly call that a pullback though. If you want to take a look at prior mystery charts and every other thing that I've recommended, you can go to davelandry.com/archives, and you can see all of the archives from my trading service on that page. And it's a good exercise, if I say so myself, in walking through some of those setups. And I'm going to come back to that in just 1 second. Now let's talk about the markets and you, and let's peel that onion on trading psychology. What I find fascinating is the more you learn about psychology and a little bit of neurology, the more normal you feel as a trader, and the more you begin to embrace the ups and downs as a trader. Now, last week we just talked about the ups, but believe me, there will be ups and downs. So let's just recap a little bit on that. Last week we talked about how this trading thing looks easy, and this week we want to talk a little bit about why it's hard, and it's not just you, and more importantly, why we're not made to trade. And we'll get further and further into that onion in coming weeks. Now, last week we talked about the fact that you don't know what you don't know, and I'll give you one example of that this week and possibly a couple of more. But the main question is, do you want to be a trader for now, or do you want to be a trader for life? So if you go into this eyes wide open, and if you had some initial success, that's great, don't get me wrong, but I think that's a poor predictor of your longer term success. And as I've said last week, some of the best traders I know started out and they didn't do so great at first, but they grinded it out, and then eventually they became really good. And when good times came along, their expectations were tempered. They used a very prudent money management, and that's how they became a trader for life. Now, as I said last week, everybody's focused on methodology. We're all setup junkies. And then money management and mind or trading psychology come down the line. The reality is, if you can work on your attitude first and then money management and methodology, you'll do quite well. In fact, all you really need, as Linda Rasky once said, is one pattern to be successful. Now, that pattern is up to you, but I have a few suggestions. Something like bow ties have struck a chord with a lot of people because they're easy to recognize. TKOs would be another really good pattern to start with. Now, as I said last week, you don't know what you don't know. In Exhibit A, we talked about the phone traders, and one of these gentlemen I've recently become friendly with, and he had stopped by to deliver some materials, and we started talking stocks, And he mentioned a stock that I actually liked. And I'm like, well, how did you find that stock? He says, oh, the chat dudes were chatting it up in my phone app. And I said, okay, well, that's kind of interesting. And then he texts me a few days later and says, hey, I made 30%. Is that good, bad, or normal? And as I said last week, after a few years, if you made 30% a month, your account would be worth 52 billion plus. And that's starting with roughly 10K, I believe, is the math that's made on. But anyway, it doesn't matter what you start with. If you can make 30% a month consistently, you'll be a billionaire really quick. And as I said before, if I can make 30% a month, you probably never see my fat arse again. Now, before we get into this lesson of what you don't know, I would never be schadenfreude. In other words, I would never take pleasure in someone else's pain, because believe me, I have enough pain of my own in this business, and no trader, no respected trader would ever make fun of someone else or be schadenfreude. It's just that there's some hard lessons that need to be learned, and the highs are high and the lows are really low in this business. So knowing this ahead of time, you can brace for these hard times when, not if, they occur. So the chat dudes were talking about some stock, and then I get this text the other night from this friend of mine, and it says this stock is down 15% in after hours trading. So this is your first, or this is his first gap against him. Things don't always go fantastic. Now, we talked about this last week. You could easily get in this hamster wheel when you hit some hard times, and then you start adding indicators and study the arcane and possibly guru hunt, and sometimes reinvent the wheel. And every now and then you hit it just right. But unfortunately, you'll have to break that cycle. Now, my best clients are actually those who come join me for a little while and they have a little success, or they kind of do okay. It maybe do make a little, lose a little, but then they kind of give up and go on that proverbial holy grail hunt. And then 10 years from now, they come back and say, you know what, Dave, I get it now. It doesn't have to be that complex. There is no holy grail. Nobody has the secrets. This trend following stuff makes a lot of sense. And you know what? I now realize the only way to make money in a market is trading the trends. Now, Curtis Faith, he wrote a book. He actually wrote a couple of books that I really like. Mr. Faith is a bit of a character, so maybe I shouldn't be quoting him. But if you do a Google on him, you'll find out some interesting things. But he wrote Trading from the Gut, and this is where I took this quote. It takes a lot of time and study before one realizes just how simple trading is, and that dovetails right in with what I'm doing. But it takes many years of failure before most traders come to grips with how hard it can be to keep things simple and not lose sight of the basics. And that's that trader's journey we all tend to go through that I just talked about. And if you're new to trading and you're doing really well, just be cognizant of the fact that things won't always be fantastic, and you could end up on that hamster wheel of that holy grail hunt in that trader's journey. So you can avoid the grail hunt and a lot of pain by finding something that's conceptually correct. Now, by conceptually correct, I mean that it makes sense conceptually. In other words, if you have a solid trend, which you could plot on a chart, or an emerging trend, something like a bow tie, and then you have, let's say, a TKO in a solid trend, then you know that some of the players have been knocked out, and you can look to enter above the high. Or if you see that bow tie emerging, you know that maybe the trend has turned, then you can look for a place to get in. Conceptually, it makes a lot of sense. You can explain it to me. I've had a lot of people come to me over the years, and then now we have the Facebook forum, and they'll talk about certain things that they're seeing in the market, these reoccurring patterns, but conceptually they don't necessarily make any sense, so you have to toss it out. And my example that I often give here is years ago, did a lot of mechanical testing, and Larry Connors was the one that taught me about being conceptually correct. Sometimes I'd make a mistake in my programming, and we'd end up with a profitable system, but when we picked it apart, it wasn't conceptually correct, so we had to toss it out. Now, once you do find something that's simple and conceptually correct, and believe me, you don't have to go on a grail hunt, you would be amazed at how simple my patterns are that I actually trade. Take a look at all those mystery charts that I've shown over the past almost year in these presentations, and just make sure you have a heavy dose of money and position management, And be sure, of course, that you actually follow it. I'm going to touch upon the process towards the end of this presentation. I recently read in a book called The Investor's Brain to be promiscuous in your research, but prudent in your trading. And I believe that wholeheartedly. I've bumped into people over the years and they'll show me something. I'm like, well, that's kind of interesting. When did you learn how to do that? How long have you been trading that? It's like, well, I just read it this morning. I thought I would give it a shot. It's like, no. You want to make sure you're spending a long time studying a new setup or whatever you think you might have found in real markets. Paper trade it for a while. Get a feel for it. And again, make sure it's conceptually correct. So as we go through this onion, as we peel this onion on trading psychology, you'll probably reach a point where you'll find that trading is hard. Well, the reason is we're just simply not made to trade. Let's say you're motivated and you're a person of action. Well, you definitely are motivated a person of action. Otherwise, you wouldn't be watching this show to try to improve your trading. So that goes without saying. Trading attracts some of the people who are the most ill-suited to become successful as a trader. People who are smart, people who are very successful, people who apply a lot of logic to life and their businesses, which has made them successful in the past. Unfortunately, sometimes those traits could go against you as a trader because markets trade mostly on emotions. So being motivated and a person of action is great for life, but not always in trading. As I often say, we're really more waiters than we are traders. And there's different types of waiting. You're either waiting for setups, you're waiting for your setups to trigger, and you're waiting for positions to move. So we go back to prior mystery charts that I'm still in. I'm sitting around waiting for those stocks to move. This mystery chart, or the mystery chart I just showed you, I'm waiting for that to trigger. So there's a lot of waiting in trading. As I often say, busy traders make good traders, at least with my methodology, because when there's nothing to do, you go off to save lives, repair automatic transmissions, and do other great things. Jesse Livermore once said, "It was never my thinking that made the big money for me. It was always the sitting." Now, that has been viewed in two different ways, and I've come to realize that I think both are correct. One is that the sitting is you're waiting and waiting for setups, and the other is that you're waiting for the market to move once you're in a setup. And once you catch a really good trend, you'll understand what that means as you ride it for weeks and weeks and weeks and weeks, and sometimes even years. Money is made by sitting, not trading. Don't give me timing, give me time. The thing about Livermore is once you start quoting him, it's pretty hard to stop. And this is all from Reminiscence of a Stock Operator, a book I would strongly urge you read if you haven't already done so. If you have already done so, read it again. A man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. The market does not beat them. They beat themselves. Because though they have the brains, they cannot sit tight. Now, about a month ago, there wasn't much to do in my trading service. And even going back further, there was nothing to do. I had no setups. And there were only 2 stocks in the open portfolio. Now, I see this pattern happen over and over again. People come into the trading service, they're looking for action, okay? And they fail to realize that if you're following a trend-following type of methodology, or any methodology for that matter, there'll be a lot of times when there's nothing to do. So people go off and leave. Well, people came in for about a month or so, and they saw that I didn't do much, so they went off to chase their rainbows. Or went off to chase rainbows, I should say. Now, if you look at the service coming into today, we had 1, 2, 3, 4 setups coming in today. You look at the open portfolio, we have 1, 2, 3 stocks in the open portfolio. Years ago, when I was with a major website, one of the first financial websites that was out there, they had salesmen and they would sell my trading service. And when there was nothing to do, I would tell everybody, hey guys, let's just sit on our hands. This market's choppy. I can't find any setups. I'm not going to do anything. So why should you do anything? Why should you put your hard-earned money into harm's way, right? Well, the salespeople would call me up and say, Dave, you got to recommend something. We're losing clients. Now, what's interesting is when I would recommend some stinkers and they just didn't flat out work, they wouldn't lose clients, or they certainly wouldn't lose many clients. They only lost clients when I didn't recommend any stock. So that told me early in my career that people crave action more than they want to trade properly. And as I often joke, if you're looking for action, have it a fair. That way you only lose half of your money. Now, in your business, I'm willing to guess that failure is not an option. But in trading, failure is quite common. And you have to get used to being wrong quite a bit. If you're an engineer and half of your bridges fall down, as I preach, or even one of them falls down, you're not going to be an engineer for very long. If you're a doctor and you're killing off half your patients, provided, of course, it's a non-serious type of surgery, doing minor surgeries, you probably won't be a doctor for very long either. But in trading, you could easily be wrong more than half of the time and still do quite well. Now, in life, you can't just sit around. You must take action. And one thing I can never understand, and I've said this in presentation after presentation after presentation, why do the same people who strive for perfection in life settle for such mediocrity in the markets? And I would do webinar after webinar after webinar, and I would ask that question. Time and time again, people just would keep sending me these setups, which were mediocre at best. And I just kept asking this question. And one day, a psychiatrist, who was also a client, answered my question. She said, I think I can answer the question about why highly trained and skilled professionals can't seem to get the chart reading / trading thing. I am a physician who specializes in psychiatry. Doctors, lawyers, and mechanics are trained to take whatever train wreck comes along and fix it. We are expected to do something immediately, regardless of conditions and despite the possible negative outcomes of our action. As a physician, if you dwell too much on the potential negative outcomes, you will become a deer in the headlights and not be able to function. So we tend to minimize the negative aspects of the situation. Waiting for the perfect pitch, as I often say, let the market come to you, is not what we are trained to do. We have no training to prepare us for sitting on our hands and waiting. It is simply not part of the mindset. And that's Dr. J. So this is what a Wednesday morning looks like for one of my clients. Now, this is a sword, and it's kind of hard to look at it. It's a good picture to look at right before lunch when you're trying to diet. Anyway, I'm pretty sure this person didn't wake up and say, oh, maybe I should get that checked. I'm pretty sure that this is something that developed over a long time, possibly a lifestyle of bad choices and neglect, and whatever the case may be. I don't know any information on this other than this is the issue he had to deal with on a Monday morning. Now, obviously, if he begins to try to fix this problem, he could worsen it, but if he doesn't do anything, then this person might not survive. So this is certainly a train wreck, and in every business, you have to deal with whatever train wreck comes along. Now, let's shift gears for a second and talk about technical analysis. Now, technical analysis doesn't really have to be that technical. My definition of it is using charts to read the emotions of others while at the same time embracing our own. Now, as you'll see in upcoming presentations, and I'm sure I've mentioned at some point in the past, you can't control your emotions. Without emotions, you would be dead in a day. Every decision that you make has an emotion involved. You just have to learn how to embrace those emotions. Your attitude is much more important than your aptitude. I've known many great, intelligent people who simply cannot trade because they're too smart to trade. Logic does not always apply. So mentality is key, and vocabulary.com defines mentality as an habitual or characteristic mental attitude that determines how you interpret and respond to situations. And if you can respond accordingly to your setups and your money management and embrace your emotions, and obviously you will become very successful as a trader. One thing I think we tend to forget is that we're really trading traders and not markets. Tom McClellan gave a great speech a while back at the American Association of Professional Technical Analysts annual meeting, which we had in New Orleans a few years back. And he said, when you buy a stock, you form a relationship between you and the company. And you expect the company to do good things. And in general, the company does have your best interest in mind. So you're forming that relationship. But what you need to realize is you're also forming a relationship with anyone who bought the stock prior to you. And continuing the quote from Tom, and those people will screw you. I emailed Tom after the presentation and said, Tom, I've been quoting you a lot on that. He says, you know what, as far as quotes, here's another one from my late mother, Marion, regarding market timing. Everyone uses market timing in their investing. Some people buy when they have money and sell when they need money, while others use methods that are far more sophisticated. So you have to realize that people buy and sell stocks for a variety of reasons, many of which have absolutely nothing to do with the underlying company. Now, I've given presentations before where I talk a lot about all these different reasons, but just think about why you might buy or sell a stock, and think about reasons that have nothing to do with the market, and that helps you to wrap your head around the often irrational behavior of the market. Now, a couple of things to leave you with. Ideally, you want to pick the best and leave the rest. Don't focus in mediocrity. Sometimes there is nothing to do. If you don't have anything to do, then don't do anything. Once you think you have the best of the best, and I would encourage you to ask yourself, is there anything out there that could be any better than what I have? Go in and look at a plethora of stocks. I go through about 2,000 stocks a day. And once I find a stock, let's say I find a little biotech, I'll go in and look at every other biotech that's tradable, enough volume within that sector to see if there's something worth trading. And hopefully the sector's also set up, and then there's a lot of other stocks in there that look pretty good. And I do feel confident, and hopefully I feel confident that I have the best of the best. Once you do that, you want to plan your trade. It's very hard to make decisions in the heat of battle. And by the way, as I inferred earlier, trading done properly can be quite boring. But you need to plan your trade, and then of course trade your plan. I know it's cliche, but it's vitally important. I get emails all the time. Dave, you said to get in the stock at 10, it's at 12 now, should I get in? It's like, well, now you've making a whole bunch of other decisions because now it's no longer set up. Whereas if you'd have followed the original plan, you wouldn't be asking me that. The other thing that often happens, as I often say ad nauseum, is somebody will say, Dave, I'm down 50% in that stinker you recommended. And I'm looking at a chart and the stock is going straight down for months. I'm like, I would never recommend that stock. It's like, yes, you did. Like when? Well, 3 months ago or 6 months ago. Well, one or two things. One, it either triggered and stopped out and we took a loss. And, it happens. Spelled with a silent SH. Or two, it never triggered, but they decided to get in. So either they violated the money management plan or they violated the original plan to get in early as opposed to waiting for a stock to trigger. By the way, I'm amazed at how many times I'll have a great looking setup and it'll never trigger and no capital is put into harm's way. Sometimes I get a little excited, want to just jump in at the market, but if I can resist that urge, more often than not, by putting that entry order in as a stop above the market where it should be, I won't get triggered into a bad trade. Now, once you do that, and I'm skipping ahead here 6 or 7 shows, but the bottom line is you need to do a post-mortem. And here's the thing, as you get better and better and better as a trader, you will do your post-mortem and you'll think, what the hell was I thinking? And that's okay to have those feelings. You might beat yourself up a little bit, but you'll say, in hindsight, that trade really sucked. I should have never taken it. I shouldn't have dealt in mediocrity. So what you'll do is you'll find yourself picking better and better stocks in the future. Now, when you start reaching the true enlightenment as a trader, you're able to realize that you followed the proper process and you look at a stock, even if it stopped out and you were at a loss, and you tell yourself, you know what? I would absolutely take that same stock again if I saw it today. Recently, I had some losses, and I do drop some F-bombs, and one client actually sent me, it's this little thing that looks like a bomb, and it's got an F on it, and I keep it on my desk kind of as a joke, because I do drop a lot of F-bombs, and I talk about that in the group, and that's just normal. I'm still have a pulse. Just because you decide to trade doesn't mean you still have a pulse, or you don't no longer have a pulse, I should say. Anyway, long story endless, when you do find yourself looking at a trade and you say, you know what, I would have taken that trade if I saw it again, and that's when you really become enlightened as a trader. And then you have to rinse and repeat. You really do have to get your reps in. You can do all the research you want and all the paper trading you want, but once you start making real trades, then you'll begin to get it. Then all those emotions will come in and you'll be able to feel those emotions and then learn to embrace them. And by the way, money management, as I often preach, will cure a multitude of sins. So through proper money management, through good stock selection, you'll be able to follow the plan. As I often say, all three are intertwined: mind, money management, and methodology. If you get better at one, you get better at all. So work really hard to get better at all three, and then you become more and more successful as a trader. And again, you really need to get the reps in and continue to follow the plan. And you need to learn how to reward yourself for being process oriented. In other words, following the plan, following the process. And that's regardless of the outcome. Terence O'Dean once said that outcomes are noisy. Sometimes bad trades can generate good outcomes, and sometimes good trades can produce bad outcomes. There's a book by Annie Duke called Thinking in Bets. I would strongly recommend you read that, and I'm sure you'll hear me talk about it quite a bit in upcoming episodes. So, presenting some problems here, starting to scratch the surface a little bit on the solutions, but we still have a long ways to go. Again, if you're looking to reach me, davelandry.com/contact. If you're looking for the slides and slides from all the other presentations that I've done, go to davelandry.com/StockCharts. I'll also give you PDFs for all three of my books. That's as of June 9th. I'll do that, and then a free market timing course and some introductory materials and limited access to the members area. I want to thank everybody for watching, and may the trend be with you.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.